Are you interested in investing in real estate but unsure how to find the best deals? In this video, we'll show you how to analyze properties to find the best possible deals. As an investor, I spend a lot of time day in and day out analyzing deals. We make offers on a lot of properties on a daily basis. That's what we do. It feels like a marketing company a lot of times, but have streamlined that process for coming up with a cash offer in a quick amount of time. So let's say we schedule an appointment to meet with a homeowner who might be interested in selling their house off market. Now what? Well, the first step for us is to create what's called a CMA, comparative market analysis. For every potential deal, we actually do this first step. Agents do this all the time, but investors go through the same exact process. So first step is to search for similar houses to the one you are looking to buy. You got to look for properties that have sold in the last 6 months in that same exact location. Basically, if you are looking to buy a Cape Cod style home, let's say located on Main Street, Malden, Mass. You want to go on the MLS if you're an agent, or if you're not an agent, go on Redfin, go on Zillow, go on propstream.com, which is another site we spend a lot of time on, and try to find a Cape Cod style house that sold within the last 6 months in and around Main Street. That way, you can have an idea of the after repair value. You want to determine what you can sell the property for after you fix it up, and you want to base that number on other sold properties in that area. Otherwise, you'll have to guess what you might sell your project for, and that is not a good investing approach. We don't want to guess any prices. We actually want to base our numbers on the local market and other sold properties. Next step is to estimate the repair budget. Starting out, you can use the price per square foot formula. If you are not a general contractor or anything, this formula can work really well. So let's say cosmetic updates will cost an average $50 a square foot. You will then multiply this by the square foot of the house. You can find that on the MLS, on Redfin or Zillow. And if you guys want to know what our cost per square feet is in Greater Boston for full gut rehabs, new construction, cosmetic updates, comment below and I'll reach out with that information and I'll share what we at Whiteacre are spending in average right now. Now that you have found the ARV and have an estimate on the repair budget, you'll apply these two numbers to the 70% rule. The 70% rule pretty much takes the ARV and the cost of renovations and gives you what's called a maximum allowable offer. It's as simple as that. It's ARV minus repairs times 70%. And you get the offer price that you can go to a seller with. The 70% rule is an important tool. I use it every day. It just gives you safety that you're gonna make a good decision. Once you have calculated that number though, you can use it as a starting point for negotiations with the seller. Keep in mind that is just a number, right? But it's the maximum price you should pay for, and you should aim to negotiate at a lower price initially whenever possible, right? You always wanna get a better deal and go up to that MAO number. By following the 70% rule, conducting thorough research on comps, I feel like the ARV, that's the most important thing you can spend time on. You can increase your chances of success in real estate investing. It's just gonna allow you guys to be profitable every single time. I like sharing good deals and bad deals with you guys. After all, the name of the channel is Real Deals, Real Numbers, and Lessons Learned. But when I look back at the deals where we lost money on, it's almost always because we didn't follow the formula, the 70% rule. And we were not accurate with the ARV, or maybe we weren't accurate with the construction budget. So let me share some details with you about one of the deals where we lost money on. House was located in Wayland on Old Connecticut Path, so it's in Massachusetts. It was an antique house built prior to 1900, was over 2,000 square feet. And these actually are both things I now pay attention to because antique houses are difficult to renovate and cost a lot of money to fix up. And they're big, right? So I tend to buy smaller houses because they're quicker and cheaper to renovate. In Wayland, we fell in love with the house. We really liked the seller and wanted to help her out. So we overlooked the formula and we didn't follow the 70% rule. We fudged the numbers to make the deal work on paper. Because of that, we lost nearly $50,000. We also lacked experience with such big properties and failed to estimate the after repair value accurately. But that experience, however tough it was and painful, taught us a valuable lesson. Leave emotions out of a deal and use the formula to get a great deal up front. It's true when they say you make your money when you buy, and by using the 70% rule, you will give yourself a great chance to be profitable every single time. Guys, it's not easy finding deals in Greater Boston where the seller will accept a discount and offer, but you will have to be persistent. Deals are out there, I promise you that. We get deals all the time. So get really good at running the numbers and go make a lot of offers. Remember, finding the best deals takes time and practice, but by following the 70% rule and researching comparable sales, you can increase your chances of success in real estate investing. If you are looking for an investor to partner with on a deal, guys, don't hesitate to contact us. If you guys want to stay up to date on our latest content, please subscribe, like, share. Help me out to grow the channel. And please join the meetup group. Guys, we have a really good time networking with each other, getting to know each other. So look at the show notes and sign up for our meetup event coming up. Thanks again for watching. See you guys in the next one.